So the joint fact sheet covering key details of the tariff agreement is taking longer than expected to finalize, and it's now raising concerns among Korean firms, especially car makers. For more on the domestic economic outlook, we're joined today by Professor Song Soo-young, professor at the College of Business and Economics at Chung-Ang University. Professor Song, thanks for joining us this morning.
Yeah, good morning to you, and thank you for inviting me.
So Korean car makers are especially worried since the 25% U.S. tariff on cars still remains in place, right? Can we expect the paper, the joint fact sheet, to be unveiled this week, and what key economic issues are likely to be included?
So far, I believe that the issue that has not been resolved yet is this build-up of the submarine, nuclear-powered propelled submarine issues. Actually, this issue appears during the sideline meeting between Donald Trump and President Lee Jae-myung during the APEC meeting conference. So this is quite new, and actually, we have seen that some divergence of where this submarine will be built. Trump insisted on building that nuclear submarine in the Philly shipbuilding yard in Philadelphia in the U.S. In the meantime, President Lee would like to have this nuclear power submarine built in Korea. So that is clear discrepancy about the issues, and then all the remaining issues are believed to have already settled between those two countries, and as the Minister of Industry has confirmed. So because there is clearly the tugging of the submarine nuclear power issue is on focus right now.
Right, and as for the domestic economy, South Korea's exports hit a record high in the third quarter, and the Korean stock market is on a strong rally. Would you say the country's economy is beginning to show some signs of recovery?
Yeah, clearly, because during the 2025 first two quarters, we have experienced some almost a negative growth rate of GDP, but we have seen during the third quarter, we have seen the 1.2% GDP growth, which has helped the 2025 year South Korean economy GDP growth will reach 0.9% according to KDI forecast. So this means clearly the resilience and the recovery of the Korean economy, but we have a long way to go. Because, of course, the prospect in 2026 was a little bit increased and better it is increased by 1.9% and from the 1.7% earlier forecast about 2026. Clearly, this is a sign of some kind of relief, but not sure yet because we have seen that so many uncertainties, including the car makers such as Hyundai, still face the 25% tariff, and 19% tariff has not been applied to car makers in South Korea. So we are going to wait and see. But currently, for the Korean economy to foster and to expedite some recovery process, I think we should need some reducing of the basic interest rate by the Central Bank of Korea, because clearly we have another meeting for Bank of Korea in November 28th or 27th. So that is a chance to raise another decline of the 25 basis point maybe for Korean economy, but not too much concern. Maybe turns out to be a hurdle and some kind of holding Korean economy from recovery. So the Bank of Korea should behave much more proactively to reduce the interest rate and relieve the burden of interest cost. And according to the prospect of the world economy, as long as the U.S. and the Sino-China relationship will be a little bit improved, but as I mentioned earlier interview, that still it is a truce, not a total armistice or kind of a friendly relationship has not built yet. So we have to wait and see, but we must be watched very closely and ready to respond immediately when unexpected thing happen.
Right, absolutely. And in the foreign exchange market, the Korean won is now at its weakest point in months. Is this exchange rate becoming the new norm?
My opinion about the diagnosis, why the exchange rate has been exacerbated during the past several months, and it has been reached down almost 13 and 51 as early as July. But mostly that issue is because of U.S. domestic issues, because of the shutdown. Okay, this morning we have seen that the shutdown will be relieved, halted, and after the 42 days of the longest history of government shutdown. And so because of that, the investors who would like to acquire some kind of liquidity to be prepared for the unexpected situation to be unfolded. So that is the primary cause to make the exchange rate has been soared. But later on, once it is settled, and then the foreign investors will come back to the Korean market because Korean market is still very promising and have a chance to raise the rate of return, not only in financial market, but also in real economic market, production market. So that is good news. But my concern lies in kind of, we have focused too much on the AI investment in South Korean economy. And clearly this looks like not as a bubble, but it looks like a little bit frothy over the financial market. So maybe more likely to develop into financial bubble. And then my concern lies in the productive bubble result in that is not the good news. So our economy and government should be prepared for the possibilities and then always be alert, remain alert and be ready to deploy some policies needed to calm down the bubble to expand. So that is my diagnosis and analysis and the forecast about the South Korean economy.
I see. That still sounds pretty concerning. All right, Professor Song, I'm afraid that's all the time we have for today. Thank you so much for your insight this morning.
Yeah, thank you.